The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. I was out yesterday. I apologize for that. Had some somewhat emergency matters to tend to, and we think we're back on track here. But I wanted to start out with the S&Ps today, and just to kind of reiterate what's going on here with these things, just to jump right into it. 2059 unfair lows on our current daily box, and we talked about this, trading below, coming up from above, and why we possibly might be wanting to opt out on selling these inflection points right now. And why did we talk about that? And let me see if I can get my chart to adjust here. Okay. We're trading right up against unfair highs now, and yesterday just to 276 was the highs of the session, and our unfair highs are around 275.25, so it's the same general neighborhood. Now we're kind of bumping up against it, but why did we pass on these shorts? Because this high probability trade on an intermediate basis, we usually take a look at that and in generalities want to try to possibly lean against the fence here. You're coming up from below. So what we decided to do was we decided to bring this thing into play, and I've got the admin version up right now, so you're seeing raw percentages. And what we saw were the percentages in our speedometer fashion. That speedometer fashion look on the S&P 500, and we can look at quite a few of them here, was positive breadth on the weekly, daily, relatively high positive breadth on the weekly, daily, and then the 240 and the 60 were, kind of meandering around almost in kind of a balanced fashion. So what did that tell me? And this is what we're going to go over in pretty serious detail with the formation of this, some of the reasons behind it, and how to look at this scanner with breadth included to trade setups that the scanner will filter out for you. But we passed on this particular short setup, and there was a lot of things leaning towards the short side, but the breadth is the most powerful thing that I think we have a chance to look at and get an edge on. So we passed on that short opportunity. We talked about, if we can pass that border, it might be okay to go long. And in past years, I probably would not be thinking like that because we're so far in the stratosphere, and we climbed up. And now that particular crossing the border above 2059, now we're back up into 276 all-time highs, and it looks like, this type of action against this inflection point here, with the breadth still positive, I know one thing: we want to pass on shorts again. All right. So what the breadth is doing for you is it's eliminating one side of the marketplace for you. So in this instance, and in the instance 2 days ago, it eliminated the short side. Now, it's not saying you have to take longs, but it's providing you the opportunity to take longs. And in my opinion, based on the research that we've done, it's providing the opportunity at least to not take shorts. All right. Now, the classical technical kind of crowding pattern here, along with we cannot take shorts right now. We can only buy support areas or buy prices as they cross these borders from below. We're not going to take. I think it's probably a low probability trade at this stage to try to take any shorts against these inflection points, considering that we're crowding new highs again. Things on their highs are going to want to go higher, and the breadth is still positive. Now, if we were sitting up here and the breadth on at least an intermediate basis was turning negative, which it is not, then I would feel somewhat okay about trying to take a shot here. But this is, again, something that I'm not advising, but suggesting maybe just to take a hard look at and stay away from the short side. So that's the situation on the S&Ps, and that's some of the reasons behind it. I'm also going to take a look at the NASDAQ here just to kind of, very highly watched instrument. Brett still positive on all levels. That doesn't mean we can't have a pullback today. But as we look at this, and as this has been the case for a while, I'm going to go over this one a little bit more brief manner. Here's the weekly. There's the borders that we crossed there with the breadth being positive. Here's the daily. So, again, we haven't had, by way of breadth, eliminating one side of the marketplace, we've tried to eliminate the short side. And right now, you don't have a lot of intermediate leverage here. The NASDAQ's kind of within the fair auction. The breadth is positive. Here's the 240-minute view. We kind of come down into the short-term box levels, if you will, the unfair lows. But again, I don't see a lot of leverage here on the NASDAQ unless we start breaking above 43.35, which is coupled with 43.33 on the daily. So what I also want to point out is, as we go into this thing here, I'm just going to go up to the usual suspects of the currency, futures, and ETF world. As this is the default screen that'll pop up, you can choose any number of combinations of exchanges here, but you've got over 2,500 instruments now piled into this thing, and you can search for instruments just like this. Well, I'm on the wrong exchange here. We'll pick out an instrument in a second. I'll show you how to do it. But right now, taking a look at what's going on here, as you can see on the S&Ps, there's the levels that we give you, 20.75 and a quarter. You know where price action is. There's where the level of the market is. There's that box. Here's the 240-minute, and the 60-minute may be changing relatively soon. But on the NASDAQ, just like we looked at before, here's the situation. I wanted to talk about a dual time frame lineup here. So you've got 43.35 and 43.33. Here's the level of the market, and as you can see, we're within those fair auctions in a real quick, easy-to-read manner. It's kind of telling you if we have a breakout and the breadth stays positive of 33.35 DMZ up there, you want to be buying those breakouts, especially if we've got a close above and we can get a retracement back into. Now, you could try to jump the gun a little bit if the NASDAQ acts, the way it may act if this happens. You can buy the breakout without the close, but the more powerful trade is the close above and the retest. Obviously, we talk about that all the time. So, again, the levels are projected as you mouse over the cells, and it just gives you the inflection points to be aware of, and there you go. So, let me actually do that symbol search thing. Michael, can you look into symbol search right now? Do some testing here. I'm going to pull up our... Actually, ES. I might should have typed in S&P. I'm sorry. That might be my fault. Yeah, we'll just wait for that to pop up and look at it in a second. I think I was using my own product wrong. So, what we want to do next is we want to talk about this dollar. So, and we're going to look at a couple of currencies against what's going on here, but we talked about this launching pad area 87.87. We talked about consolidating above profile highs here and at least eliminating the short side of the marketplace on this trade. And we've had a kind of a launch here back up into the stratosphere. And here's the levels that I can only talk about right now. 89.06 unfair highs and 88.75 now unfair lows on our short term. I'll repeat those, 89.06 and 88.75. So that's the environment we're in right now. And if you're going to trade the dollar on the short side or the long side, any breakdowns below 88.75 may have a retracement back into that 87 area. I was making sure I was saying that right. And any breakouts above 89.06 are going to more than likely have to be, bought as a breakout. But, we don't have any breadth information to enhance this. What we could do, just kind of in theory here, just to kind of give you an idea of how powerful the breadth is and why the concept of it is, in my opinion, so cool, is we could take the components of the dollar index, put it into a basket, look at the profiles relative to the whole, put our percentages together, figure out the balanced area that some of these products may be in, and then create a breadth for the dollar. So, for instance, if the profiles of the internals were showing negative breadth, then I might be interested in only buying this, right? So if the profiles of the internals were showing positive breadth, that means that the kind of opposites are going to be possibly climbing higher. Therefore, the dollar may have to be sold. We don't have that put together yet. And the problem with doing something like that in theory is the data sample set for those components is relatively small. I mean, think about the S&P 500 breadth. This is what we've got on this. Pull that back up. These are 500 stocks, and it gives a really good data sample set to work with. And if you have a couple of anomalies going in, I think the dollar index is comprised of about 13. Is it 13? Maybe somebody in the den can tell me that. Underlings. That's a relatively small data set, and you could have some anomalies happening within that data set to sway the breadth itself. That's the situation on the dollar. When we come back, we're going to start taking a look at other currencies, and then we're going to get into a couple of other things, namely the yen. How do we trade that animal now? That's up about 2,000 pips from where we started at 101, and the euro, which has kind of been one of my favorite trades to sell inflection points based on fundamental and technical. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Thanks for joining us today. I'm going to take a look at, real quick before we talk about the other currencies, I'm going to take a look at January beans for a second. And here's the weekly situation on canned beans. So the long term, we've got 974.5 sitting there. This week alone, we've gone down, as low as 983. So not quite there yet. Jump back to 994 bushel. And what I want to kind of show you here is also that you can get these levels from really quickly and easily. Let's do this, get rid of this, go back to futures, let that populate. We'll show you in a second. And there we go. And what we're showing here is, got our grains up here at the top, that level, 974.65. So here's the kind of multi-time. This chart doesn't give you history or anything like that, but I just like to kind of see the level of the market, and this is just something I wanted to see. So here's where we're at, kind of coming back down into this, obviously, sitting right above the 240 unfair lows here, and kind of already broken down a little bit on the daily. So let's take a look at this on the charts. And here's the weekly. There's at 974.5. And hopefully we're going to talk about what we're supposed to do with this thing. I've been kind of bullish on beans. I think I've spoke about that. This is really something that I thought was going to actually go into the 1068 area. We're kind of in the ether, kind of in here bouncing around in the fair auction. We talked about leveraging longs off of this 1002, 1004 area before. And, I was kind of happy with the long attitude with this. And when we get below this 1004, 1002 area based on your appetite for risk, and that means, in my opinion, by all means, getting down into this 983 area, that's probably a little bit lower than the noise room that I would give it. Now we've kind of come back close below, kind of retested against this 1004 area today already, which is 1002, 1004. I think we reached high as 1002. This is the kind of action really that usually predicates a little bit lower move. So what does that mean? That means that the lower move may have a target-rich environment around 974.5. So we're kind of in no man's land here between, on the very long-term weekly being relatively bullish, and then on the daily maybe needing to stop ourselves out on that intermediate type trade. And, this is a good case study really of how I think, scanners or levels, inflection points can save you some money. So, we got around the day, market rallied up. The 240s we kind of use to regulate that usually, not to give back too much. So as we kind of got up in there the other day, how high did we reach here? 1054. When we started breaking down a little bit on the 240s, and those were two inflection points lining up, that was a kind of a stop-rich environment. If you were just trying to, again, I use the 240s, me personally, to kind of regulate profitable trades. And that's just kind of the way I look at it. But as we kind of get down below and start breaking down that regulation type move, and here's the start of the move. I get this split over here. Remember that $10 area, 1002, 1004? That's where it started. That's where we came down into, if you can see my screen. Regulated up, boom. Then we had a little bit of technical damage. So you can use these as kind of like an intra-box stop-out machine, if you will. And now it looks that we're trying to stay below profiles on the 240, as we saw in the scanner, and we may have a better long opportunity, in my opinion, around 974. So if you use the stop out, and again, this is hindsight, and I can make anything look pretty, I'm aware of that, but as we look at that area around 1040, 1041, that could be a savings area. Now you're going to try to pick a battle again. If you're biased towards the long side around that $10 area, that's fine. Everything doesn't have to work. And we play odds all the time when we're in the trading game, and now you've got a 974 area that might be the most ripest area that you have in this process. So looking at what we just looked at could have possibly been a savings of around 50, 60 cents a bushel, as I see it, even with getting stopped out again. So we're going to talk a little bit more about this, in my opinion on it, and come right back. We're going to get into those currencies.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I've got gold up. We talked about soybeans, the January contract, and to sum that up, I'd like to take another long shot around 974 with a little bit of noise in. I mean, it's probably going to rattle around the long-term inflection points, but then the targets would be that 1002, 1004 area initially, and hopefully the possibility of maybe even adding to that position if we can get a close above 1002, 1004. I want to bring up gold before we get into the currencies. Here's the situation here. We had was that really an $80 day? That's amazing. We had the other day, and we had the close above. We talked about this too. We never had the close below these profiles, below the 1152 area. So that intraday noise, so to speak, allowed us to. That was a buying opportunity, and that was So to back up a little bit, I'm sorry, I'm getting ahead of myself. This kind of crowding action around this inflection point, we never got a close above the 1198 area, and that's what I kind of needed to continue feeling relatively bullish. So then we started coming back in here, and anybody who's hanging on around here with noise, just in my opinion, there's not a lot of reasons to hang on. We talked about that, and we also talked about coming back down into this inflection point as a buying opportunity, but based on your appetite for risk, this might not have been something that you could have hung around with, and I think we talked about that. But since we didn't get the close below, intraday we get back above this border. And, this is a crazy day. I'm not going to look backwards in time and say you should have done this, you should have done that. I hate people that actually tell me that. But the fact of the matter is, after this day, and we also talked about some risk rules and what had worked for prop groups in general that I've been involved with. And sometimes when you reach your limits, even if things like reversals happen and stuff like that, invariably you're going to have days where you stop yourself out on your maximum P&L that you can afford for that day. And you should have a plan like that if you're day trading, by the way. There's so many things I want to tell you about that, but if we have these reversal moves in your favor and you're not allowed to hit the keyboard anymore, that's okay. It's just part of this crazy thing called trading. You just have to kind of try to turn the rents the same way you come to work every day and just, play the odds, manage the bet. After we had the close above this profile, we come back and retest it. Now, is this a lot of noise on a retest? 1191 was the low 2 days ago. The unfair highs are 1198. That's up to you based on the noisy nature of gold in general. And if it was too noisy, you have the opportunity to kind of get back into that trade a little later on breakouts. So now we've kind of come down, retested, come up. I like the way this is looking, and I've liked the way gold has looked before on the long side. I'm not going to mince words here, but again, I like this formation, and I like the ability to trade gold from the long side with stops below 1198 based on your appetite for risk. Okay, and that's the way I'm looking at it. I do not consider this a smart trade, by the way, to hold on to this if we start migrating back down into 1152 again. So like one of those things, if you loved it here, you got to love it here. I mean, I don't think that's probably a good idea for traders in general. So again, put the stops in. I'm a little bit long biased towards gold, and I like the way this navigator is compressing back up into getting positive. So let me move into the currencies for a little bit here. And we talked the other day about, why do we continue to look at, these similar trades and are not really focused on stocks, even though the scanner picks out really ripe opportunities for us on the stock side, is because these are, as a trader, you want to try to obviously trade the things that are in play, things that are moving, and these currencies and notes and indices to some degree, gold and the euro is just kind of climbing like crazy right now. And so the euro trade below 124.32, and that close below was really pretty powerful on the short side. Now we've got a relief rally based on some things going on. I think somebody's speaking over there right now and raising rates or not raising rates, but the price action right now has been pretty dynamic. And as we look at the daily, we just looked at the weekly on the euro. This is what we're going to try to glean out of this right now. As this has been one of the better trades on the books, and in my opinion, the currency to pay attention to, we've had a little bit of a divergence situation of navigator and price action here. And we've definitely got a little one right now, but because of the overhanging fundamental things out there, we've kind of ignored some of these divergences that have happened, and we've continued to stay relatively short-minded. And we've talked about targets for this in the 120 area, at least temporary targets. And I'm still sticking with that, and I don't think you need to start concerning yourself too much with this particular trade being over unless we get back above 120 on the intermediate to long-term basis, above 124.33. And if we get a close above 125.76, anybody who's trying to hang on for a little bit longer, pain threshold or whatever, that's going to have to be something seriously paid attention to. Here's the 240 on the current day, and we've got a box that's going to probably appear next 240-minute span or bar based on us turning from red right into green. Here's our 60 minutes. This thing's relatively active right now. So, what do we do right now? What do you do if it's in your face right now and you shorted some Euro USD crosses down here. Well, you've had a pretty good ride down from some of these inflection points, and if you watch this show, you haven't had a lot of things to lean on to try to short this again down here. So if you're shorted, there haven't been any new profiles down here. For whatever reasons you're shorting, whatever time frame you're trading on, you've got to put stops in. If you kind of did this without some of our information involved, there's really no new information involved right now. So I really don't know what to tell you, actually. Here's the situation on the yen. Okay. Weekly, not a lot to talk about there. Daily, not a lot going on there. I wanted to show you these, though, because as the yen has climbed higher, there hadn't been a lot of reasons to get out of this trade, if you'll notice. But we had some noisy situations around 107, down into 106, down into 105, but that kind of clipped you out a little early. And then we talked about trading off those weeklies a little bit lower because of the fundamental overhanging processes for this particular trade, this currency. Here's the 240. Again, I don't see a lot of reasons to get out of this trade right now from the long side. And right now, based on looking at the scanner, and I'm going to go to the yen here. For currencies. We're pretty green across the board here, as you can see. So it's not letting me say anything other than buy dips at this stage. And right now, I don't see any reasons to sell the yen, even though we're breaking down just a little bit here. In the 60-minute, as you saw, was a new box was attempting to appear, and we should get a refresh there. Let me just check that. Yeah. And this is going to turn red right now. So Aussie dollar, we've been pretty mega short on this thing. Here's the weekly. Here's the latest big reason on the Aussie dollar was this close below retest, high probability setup to move lower. Here's the situation on the daily. Not a lot of reasons to get out of this short trade at this stage. I don't see any targets down here we can take advantage of. Here's the situation on the 240s. Again, let a fine wine breathe. I think this thing is probably going to be in the 80 area, and right now we're trading 83.79. We haven't watched the British pound in a while because it just has kind of been languishing around. I haven't seen a lot of good things to key off of. I want to pull up the ruble really quick. Putin has, been making speeches and things like that. I mean, I've read them all. I think you should probably take a look at that if you're trading crude oil and currencies in general. And as we're talking about currencies in general and crude oil, I'm going to move into crude. I've called around a lot of deaths of people that I know in this trade because, there's going to be snapback situations that happen with this, but we've got a new profile that has appeared on crude oil. This is the January contract. It would be nice if we got a rally back up into 70, 78. And why is that nice? Because that would be a downtrend retracement back up into an inflection point that I feel is a relatively high probability trade. And here's that situation right on our scanner, 70, 77. And here's the kind of multi-time frame level chart here. So I'd like to see the level of the market go back up into 70, 77. And I don't think you've got any leverage to short crude oil right now or actually go long on the time frames that I like to look at. Okay. If you must go long, you're going to have to wait until we cross the 67.26 like we did before and just take some shots. But again, I don't see a lot of big leverage on the long side for crude oil. And there's not a lot of good news out there for this thing. And they talked about, less stocks and things like that. But, I just think the overhanging fundamental factors out there are just going to continue to drive this lower. And therefore, if you got that attitude, you should be hoping for little retracement rallies that can get you into either more crude oil or your initial shorts of crude oil into new inflection points. So, as we covered some of the usuals here, I want to take a look at Apple. We had a really volatile day when I was talking about Apple the other day. Here's the weekly situation, and tomorrow, if we still have this orange bar on the close, which I hope we will on Apple, we'll get new weekly inflection points, and that'll be the first time, that's happened since early August 2014. So got to keep your eye on this. And by the way, let me kill all this. Start the S&Ps there. Okay. Problem with the charts here. Okay. So as we wait for the scanner to load all those stocks that I just chose, we had a new daily box appear on Apple yesterday, in fact, and this was the setup. Just like the S&Ps, right? We got back up into that inflection point, but Apple's a different animal than the S&Ps in general, but Apple drives the S&Ps a lot of time and the NASDAQ. And if you take a remembrance back to us looking at the breadth indicator to trade the S&Ps and the consideration that this might be a relatively high beta stock with a lot of impact, the breadth is saying that the S&Ps are going to go higher. Just that fact alone could drag up stocks like this. So again, is it a different animal? Yeah. Do I think Apple's a little bit overvalued? Personally, yes. Do I think that was a good leverage opportunity to short? Yes. But right now we're trading a little bit higher. Let me just see where we're at pre-market here. 116, So we're a little bit higher here. And any closes into this fair auction, which may happen today, you're going to have to kind of just sit tight, in my opinion, on the short side for Apple right now. And, just have to wait until we cross some borders again on the south side. If we get back up into this area and the S&Ps are making new highs, I'm probably not a big fan of shorting Apple into these areas right here. If you have been a fan of Apple and want to go long, you've got some reasons here to go long, but there's no urgency to go and get into Apple right now. Just sit tight and let's wait for some clearer information to appear, being that we've got a weekly new box that's probably going to appear and now a daily that might appear with new inflection points. Guys, we will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I've got the S&Ps up on a daily, and we're trading 2067 right now, 2068. This is live quotes. Had a little bit of a breakdown here, 2072 on the 60-minute, but we don't usually look at that. Let's just go into the 240. So right now, hold on, guys. Michael, can you check the power here? Is that plugged in? Okay. Right now on the 240, we've got a new box that's probably going to appear on the S&Ps. But remember, you're going to have these little pullbacks in a trending up market, and I'm going to again reiterate. This is pre-market, but I'm going to reiterate that on the long term, breadth is super positive. Intermediate's just overly positive. The 240s and 60s, I mean, we're going to have some changes happen with that breadth as the market opens around 9:30 your time. But right now, I'd be more than likely treating every little pullback blips like this as trying to find new inflection points to buy with stops oriented around that on the long side. Excuse me. wanted to look at another stock I was reading a lot about over the past day when I had to go on the trip there. Tesla. I'm going to pull this up here. And technically, we kind of crossed back above this 242 border, and then, this week we just kind of started out below it, and that inflection point was something to lean on for the entire week. As we look at the daily, I want to pull up the weekly one more time and just state 242 weekly unfair lows, daily 243.76. So as we open below and kind of retrace back up, I'm a little bearish on Tesla. I think it's a great company, but I think the numbers don't make too much sense at this stage. And then with oil getting killed again, I mean, you've got a couple of people going, well, what if this continues, blah, blah, blah. So you've got some technical reasons to be on the short side of this. And fundamental news out there isn't the greatest in the world right now. But long term, I am still a huge fan of this particular company. Here's the numbers on the short term on Tesla. Thanks. Somebody put it on the scanner in the room. Thank you very much. Don't forget, I'm a little tired today, I'll admit it. I don't sound excited as I possibly do sometimes. I had an emergency trip yesterday, but there is a very exciting, alternatively speaking,
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.